Insurance sector in India. We have seen that in the early 21st century, we opened our insurance sector. Largely, it was closed in the 90s and before that. So, once we opened with the FDIs and other possibilities to invest and the private players to come in the sector, we saw incremental increase, some increase over the past 2 decades. And if we see today, we are standing at a penetration level, an insurance penetration level of 4.2%, in which 3.2% is from the life insurance sector and 1% is from the non-life insurance sector, which includes health, motor, and others. Now, if we see the kind of penetration, then it is relatively lower. In particular, the non-life insurance penetration is much lower than the global average. And if we try to understand this parameter of insurance penetration, then it is measured as the premium which is being put in the industry as a percentage of GDP. So globally, there's some international average which India is trying to meet. However, it is falling short of that, and the idea is to develop this industry to beyond 200 to 300 billion dollar market. Currently, we are trying to head to that situation, and recently we have seen the appointment of the former finance secretary Sri Debashish Panda to head this sector of insurance regulatory and development authority of India. And the idea is to look into the challenges and create a roadmap for development of this sector, both in the life and the non-life sector. Now, another key parameter to measure this industry and the positioning of India compared to other countries is the insurance density here. So we have seen an increase of 5 to 8 fold over the past couple of decades of insurance density. How do we measure it? This is the premium being paid per population, per capita. So that amount is somewhere around in dollars, $78. What we are doing. If we break that into life and non-life, then nearly 80% is life and 20% non-life, approximately. And compared to the global average, it is falling short by 5 to 6 times, both in the life and the non-life sector, the insurance density. So there's a huge scope of development in our insurance market. The market size can grow beyond $300 billion and even beyond that. And the idea is to make this happen and look into all the possibilities on where we are falling short, and leveraging on the fact that India is getting more sensitized about insuring themselves, be it life, non-life, especially with the COVID period just passing by, at least for now, we can say. We are sensitized about our life insurance and other health insurance, COVID coverage policy, and other things. So, India is looking in that direction, and it is required to be leveraged, regulated properly, this market, and being taken forward. One point which is to be noted here is the the insurance companies are bleeding red in most of the cases. And why that is happening? Yes, LIC is making profits and going for IPO and other stuffs, the disinvestment. But in general, the market players are facing difficulty when we have seen that in the case of Pradhan Mantri Bima Yojana, players uh, got charged unduly at times from the private parties at a low premium. In the hospital case as well, we see hospitals charging exorbitant fee to patients and those who are covered with insurance. So that is all, what we all know, and insurance companies are again bearing that cost. So there is a discussion around this as well, that hospital shall also be the charging. Their charging shall also be regulated and being watched. So, Insurance Regulatory and Development Authority has a huge task in multiple sectors, hospital being one, agriculture being another. With the new chief in position, it is expected that things will improve and the sector will develop. Thank you.